Stocks fell and oil rose. The market's lack of consistency has been the theme of 2018 this far, and it doesn't seem like it will change anytime soon. With inflation picking up and expectations looking quite negative as interest rates rise, what could central bankers do? Or is it possible that central banks have created every crisis intentionally? You came here for the truth, so let me unveil that for you. Today we're going to look at oil, gasoline, currencies, the state of the economy, and so much more. Let's begin with this article out of CNBC. Stocks fell on Tuesday as tech shares dropped sharply, offsetting solid gains in energy. So this is going to talk about what has happened today. The market closed early because of the holiday coming up. And what you can see is that stocks dropped, tech shares leading that, and you had oil rising. Okay, so more details on that here. I mean, you could see specific names that they're pulling out, such as Facebook dropping, Apple dropping, Amazon dropped as well. Now, if I look at this here, I can see the actual market coming down by 132 points, still above that 24,000 mark. Look at where it has come over the last several months, as I've mentioned many times before. Just to quickly note, January, it peaked out. It has never risen to the same point it was at before. There are a few stocks which have bet their previous highs, and that is namely the tech sector, specifically the FANG Plus stocks. So we'll see that here. I've shown it to you 100 times before. I'm going to move on to show you this. Oil topped $75 for the first time since 2014. Then it dropped from that point on. But it is important to note that it did hit that $75 a barrel mark. We haven't seen this happen in years, and here we are today watching it rise. This is making a few countries start to be able to produce quite a bit of profit. Now look around the world and think about all the countries who are exporting oil. The higher it goes, the more money they're making. All right. Production at the Syncrude Canada's 360,000 barrels per day oil sands facility near Fort McMurray was hit by a power outage. So that's going to be a problem that could be affecting it. But look, Canada, as far as I'm concerned, despite what the media tells us here in Canada, is that they're not a big producer of oil when you compare it to some of these other nations. So it shouldn't really have much of an effect, though they do like to use any excuse to pull the market down to push it back up. Okay, this is what I always see. You know, you have a country like Venezuela, which is sitting on a massive reserve, and they can't pull it up out of the ground. They don't have basically they don't have the business to be able to do it. They just simply don't have the money. They're not making the deals with other countries or other corporations. Perhaps there's a lot of things going on, and of course there are external factors coming in that are preventing them as well. I just like to look at oil as not just so one-dimensional, and I want to know that there's more going on than what we're being told. All right. Here we go. Looking into more information about this. U.S. gasoline prices are at a 4-year high this year as a result of the higher price of oil, which had reached a 3.5-year high in recent weeks. One thing I want to mention, as I always do, is that you can look at the oil prices and you can look at the gasoline prices. And to me, I don't care what anybody else says in the media. When I look at this, is a wonderful line I'm drawing here, but if I look at this as a chart, I can see that you can tell if oil prices have been heading in this direction, gasoline prices have been heading in this direction. Then when everything came down, both gasoline and oil prices came down, it was still not proportionate. I mean, we saw this wild, nonsensical rise. This is oil, and again, this is gasoline. The refineries are making a killing right now every time they do this around. I mean, look at the last time oil was at this, or I should say gasoline was at this price. Oil was significantly higher. Why does it always diverge so much? There's a lot going on here, and it's not just the price of oil. Okay, there's much more. The higher spending on gas could offset 1/3 of the gains from the tax cuts, with low and middle income families feeling the pinch much more than higher income earners. Surely that's the way it goes, where you have individuals, for example, if food prices rise, if it's, your food bill, instead of being, let's just say $500 a month, then, it's $550 a month. After a year, it changes by $50. To the average family, it may not mean that much, but if you're making, to the point where $100 more and you'd be into debt, you can't, $50 is a significant amount, and that's not just on food. That's the way they like to skew the statistics. Oh, it's only $50 more, so therefore it's okay. It's not that, because things don't just increase as one thing. It's not just food increasing. It's food, it's energy, it's everything you go to buy. It costs more. And now that I drew all over it, the increased pump prices are now eating into the disposable income of the average American household. That will have a total of, check this out by the way, $440 less to spend this year on other goods and services, because this money is expected to go for buying higher priced gasoline. It is affecting those in the lower income brackets because they're not able to save as much. They don't have enough savings to begin with, and so unfortunately they'll really lose out in this case. But it is affecting everybody. Higher prices affect everybody, just to a different degree. All right, this would be tantamount to a tax increase on American households. This is especially true for middle to low income Americans. Surely we talked about this already. Now I want to just look at the general economy for a second here. Malls are the emptiest they've been since 2012, and the U.S. economy was still struggling, it still is, to recover from the last recession. Vacancy rates have hit, check it out, I'm getting fancy today, if it will allow me here, 8.6% in the second quarter. All right, these numbers here are supposedly because of, very fancy, shopping online. But it's not just that. I've covered it here on the channel before. I've seen numbers of either 9% or 10% of all retail is online. If only 9 or 10% is online, then what's happening here? Well, it is my understanding, based on all the research I've been providing here, is that it's not just online sales, though that is a trend that is having an effect. It is simply a matter of an economy that is weak. If I look at prices in San Francisco on real estate, if I look at prices of real estate in Manhattan, if I want to look at oil prices, if I want to look at FANG Plus stocks, I can put my head in the sand, I could put the blinders on, and I could say, yes, look, everything is doing fine. But when I take all of the statistics together, the thousands of indicators, okay, not just 2 or 5 or 10, thousands, and I really objectively look at it, it doesn't look so good for the average person. If you invest in those particular assets, like you bought real estate in San Francisco 10 years ago, you're holding it today, you're looking at an appreciation because you've used that as an ATM and you probably pulled it out and bought a nice Lamborghini with it. But if you're just the average person working your 9-to-5 job, you're probably trying to keep some savings in the bank, it's destroying you. Every month you got less and less. Do you understand the difference? I know you do, because you are tuning in all the time, and we're definitely on the same page with this information for the most part. 10 more Sears and Kmart stores have been added to the growing list of locations slated for closure. This is more. I mean, I don't even know how these two companies are still around. I thought they were gone, but here they are. And so 2018 is going to be the year of record store closures. It's on pace to do so, of course. Now, I want to get into currencies. I want to get to some other information. I'm going to rip through it very quickly, beginning with this. Turkey's currency was dealt a fresh blow early on Tuesday after data showed that the country's inflation rate jumped sharply last month. I'll show you a chart about that in the next second. Look at this. Consumer price index climbed 15% in June from the same month in 2017, up from 12%. So we have a significant jump in inflation in Turkey. I know my friends who are either from Turkey or have family from Turkey, they're asking me, do a video. Well, here's some information here that we can see that this has increased with all of the presidential election and everything that was happening there. We saw some issues that were taking place. But I want to show you the chart here. Looking at this going up, you could see heading on its way upward. It was literally double the amount of inflation in, let's say, maybe a year and a half at this point. I would say a year and a half. And we've seen that increase rapidly. It's never a good thing to see a rise in inflation rates when the people definitely will not benefit from that, okay? So if you're invested in real assets at the time, maybe you have some real estate or something, you would see that being, coming up. It's appreciating. If you had precious metals, I'm sure it would be appreciating as well in Turkey in their currency. And whether or not they are, I just see the general economy to be weakening as a result. I mean, this is a very high inflation rate. Surely we wouldn't see this level in some of the other Western countries. You wouldn't generally see 16%. However, it's just a matter of fact that as it increases, the purchasing power is declining. Lira per US dollar, looking at this, just in this short period of time, is showing us that it's weakening. I've mentioned it before, whether it is Turkey, look at Argentina, look at Venezuela, look at Brazil, look at all these different countries. Their currency is devalued against the US dollar, not just in the long term here, but also in the shorter term. But once again, love to mention the fact that all currencies are devaluing against real goods. Okay, I want to flip pages again, looking at this public debt. It's funny the way they spelt it. In comparison, Italy is a different caliber than Greece. I want to mention something about this though. When you look at a statistic, don't take it for what it is at face value. You need to dig one layer deeper at least. Yes, Germany, Italy, France, they have huge amounts of debt. There's no doubt about that. But it's always in relation to what that country, what that person, what that city, state, province, whatever it is, how much they have in, let's say, their assets, their income, what they're bringing in. So for example, if somebody is making $40,000 a year and they're holding on to debt that's $2 million, that's a lot of debt in their mortgage. But if it's an individual who is making $1 million a year and their debt is $200,000, well then clearly it's not an issue for them. They could pay it off right away. So understand how that works. Always, as I said, one layer deeper at least. Look at Greece. This country is suffering. They had their third bailout and they're going to be worse off at the end of it all. Okay, already foreshadowed that in my book, talked about there will be a second bailout for Greece, and that's before the second one came out. And I also said, and there will be more, and you could see it right here. QE2 happened, QE3 happened, and here we are. I'll end it there. Just wanted to quickly just share of outstanding government bonds and percentage held by the 4 categories of creditors listed. One thing I want to note is the fact that central banks, ECB, that has increased like really dramatically over the last 10 years, as well as we can see that foreign creditors makes up a huge chunk of the total. Okay, that's all. I'm going to end it there. Wanted to mention that I didn't have enough of a video to squeeze that in, so I just wanted to squeeze it in here at the end. If you found the video informative, please give me a thumbs up. If you appreciate the work that I do here, I would really do appreciate if you give me a thumbs up. That's the way you support me. A lot of people support me through Patreon, and I'm so grateful for all of you. Others do it through PayPal as well. Thank you to you as well. People support me by buying the books. Other people are giving me thumbs up, they subscribe, they comment on this video and other videos, and that's all very, very good. It really helps me out a lot. Last month alone, I think I just read the statistic, I had 10,000 shares on my channel in 1 month. So I appreciate everybody hitting that share button. Thank you. Now, if you want the financial education you were not taught in schools, then these 2 books have it all. You can get this at themoneygps.com. You can look over there what I have free info. If you want to just go right to the books, flip through them, that's at Amazon. Links in the description below.